Welcome to PhillipCapital's Weekly Market Watch. We see some ambivalence in investors' sentiments recently due to fears of a double-dip recession. This is despite encouraging data from a healthy US earnings season and agent growth. Due to this, there has been a lot of price volatility in the markets. Today, we have Mr. After Sandhu, Asian Commodities Manager of Phillip Futures, to give us his take on how the current situation is affecting the soft commodity market. Mr. Sandhu, what is your outlook for commodities considering the recent price volatility?
The recent price volatility is primarily due to uncertainty in the markets. Volatility had risen across the whole commodity complex as fears of a double-dip recession set in. However, more recent positive macroeconomic data has calmed investors' jitters over a possible deep recession. With this, commodity traders are reverting their attention back to each commodity's fundamental outlook.
How do you see these fundamentals?
It varies from commodity to commodity. We have different set of factors affecting different commodities. The tension on raw sugar, for example, is focused on the congestion at Brazilian sugar exporting ports. The bottleneck is expected to continue into this quarter and prolong the tightness in the physical market. The grains market in the US is currently at the weatherman stage, where favorable or adverse weather would greatly affect prices. Soft commodities like live cocoa, on the other hand, is experiencing a short squeeze in the nearby months.
What is your outlook for soybeans, corn, and wheat futures market given the changing weather patterns?
Soybean futures have diverging fundamental outlook, pushing old crop and new crop contracts in opposite directions. Tight availability of near-month supplies are propelling the front end of the market, while favorable near-term weather is weighing on deferred month contracts. Wheat prices are expected to lose some bull with reports of improved weather conditions in the wheat growing areas of southern Russia and Kazakhstan. All eyes are also on whether benign weather would affect corn as it goes through the critical pollination stage of growth.
How is soft commodities like Arabica coffee faring?
We believe that coffee's rally this year has gone too far. Global production is expected to increase 12% to 135 million bags next season, with gains in Brazil of 50 million bags as compared to 39.5 million from the previous harvest. The Brazilian harvest is continuing, while the tightness in the Robusta market is being factored in the recent pullback. We expect ICE NIBOR September contract to fall back to support at 155 cents a pound.
Thank you, Mr. Sandhu. That's all we have for you today. Tune in next week for more market updates.